Good morning. It's Wednesday, October 24th, 2018. It's currently 9:27 Pacific Standard Time. So over in New York, Eastern Standard Time, it's 12:27 a.m. As you can see, the indexes, the major U.S. indexes are down again today, in the middle of trading right now. It's been a pretty volatile day once again. So far as it was yesterday. So far with the S&P at present down 0.77, the Nasdaq down 1.36, the Dow Jones down 0.32. Oil has bounced up a little bit, 1.78% up to 67.61, and gold is still above 1230. It's at 1231.50, and I've got the daily S&P index in front of you right now. You can see that big drop down, and right now the market's testing out a bounce off of the lows around 2700, 2703.04. The market's seemed to test 2717. It's bounced off that, and well, we'll see where it all goes for the rest of the day. But surely, looking back over 5 days or a month, you have to be a pretty pessimistic person right now if you are a bull, or rather, you'd have to be very optimistic to be a bull. But rather, if you are a bull, you've got to be a bit concerned right now with this last month of trading. Really, I mean, look at that. Not a particularly bullish sign. Going over 3 months, does that make it look any better? No, it just doesn't. I think all of those thresholds are gone, like I talked about before. So, maybe on a 6-month time frame, this current recent action seems a bit more, that it can be synthesized into the market, and year to date, perhaps it's less concerning, although even there, it's certainly changing a lot of bullish presuppositions that existed before. So, as I've said before, I have a position short of this stock, and short of this index, and I think I'm going to hold on to that for now, because this does not look like a very happy, positive, up-moving index. I just don't see it coming back up. Like I've said before, I do think 2713 is going to act as a floor for this market for a little while, but I don't know if that's going to last forever. It's been kind of going, arguably since the 11th. I think back then it had lows of 2710. So we'll see. I also saw this this article on CNBC.com. I really just the headline even here, that tariffs are dominating earnings calls, with more than a third of companies discussing the fallout. Of the 110 S&P 500 companies that have already reported third quarter earnings through Tuesday's close, 41 of them, or 37%, have either explicitly discussed or answered questions about tariffs. So Caterpillar was a big one. I think yesterday came out and once again repeated their warning that the tariffs were going to pose a headwind on their earnings and their profits, and they got punished yesterday. So I'm not going to go through this whole article, but just wanted to point out that these companies are reporting to their investors. A third of them already are reporting and flagging to their investors that tariffs are of concern and that they're going to be impacting profits. So I just really struggle to understand how anybody can support tariffs as a sort of punitive measure. I suppose, perhaps they could be form some part of the taxation package, but trade, everybody loses from trade wars, and America is going to be losing very soon. The consequences of these tariffs that Trump has brought in are going to become increasingly apparent very soon here, over the impending months. So keep your eye on that. It's not going to be pretty, especially with the declining liquidity in global markets, the reducing dollars available, the rising interest rates of the Federal Reserve and other central banks around the world, including our central bank, the Bank of Canada, which today raised its rate to 1.75% from 1.5%, and they signaled that more hikes are to come. You've got this article in front of you right now from Financial Post detailing that. So that's this isn't going to stop, these interest rate increases, at least not today, and not tomorrow. People are expecting these interest rate increases to continue for the next year so far, and beyond that, it's all rather speculative. So that's one thing to keep an eye on. And related to that, I saw this other headline this morning I wanted to share with you really quickly, which is 1/3 of Canadians fear bankruptcy ahead of Bank of Canada rate decision. Canadians are growing increasingly anxious about their ability to handle higher interest rates, with a new survey showing a rising proportion of consumers fear they will be pushed over the brink. 1/3 of respondents to an Ipsos survey conducted on behalf of MNP said they are concerned higher interest rates could push them toward bankruptcy, marking a slight uptick since the previous survey in June. So I'm not gonna read this whole article, although I will touch on this point as well here. Meanwhile, almost half of respondents, 45%, said they're already feeling the effect of higher interest rates. So this group, MNP, conducted this survey of Canadians before today's interest rate increase. And this is quite a significant number of people, 1/3 or 33% of respondents saying not just that they're anxious about higher interest rates, but that they're thinking about bankruptcy. 1/3 of Canadians are at least fearing bankruptcies explicitly with these interest rates where they are. And as I said, interest rates haven't stopped. They've got nowhere to go but up right now. So that does not bode well for the Canadian economy as well. And 45% said they're already feeling the effect of higher interest rates. A lot of people who I've talked to about the interest rates going up, and I've tried to, express alarm or concern that people are going to be impacted. Many people say, well, it's only going to go up 1% or 0.5% or maybe 2% over a couple years. That these rates are going up slowly. And while that's true, going from a 3% mortgage and it going up 1% to 4% is still a 33% increase in interest costs. And 1% on $1 million mortgage, like people are getting, in Vancouver, that's still a lot of money. And you roll in, credit card debts, and you roll in lines of credit. It doesn't take a lot to push many people over the edge. And if, their mortgage goes up by $80 to $150 and their credit card interest rates, go up to $50 and their line of credit payments go up $80 to $100, these things start adding up and could put a lot of pressure on a segment of the population. So I think we need to really look out for this. Obviously, if you can, you ought to be paying down debt right now with these interest rates coming up and impending. So I just wanted to bring that to your attention. Thanks for listening, guys. Bye.